For years we've heard this promise, right? A stable digital currency. It always felt a bit out there.
Definitely on the horizon, yeah.
But now with the U.S. Senate actually making moves, this whole idea of paying for stuff with, like, a digital dollar, frictionless, pegged, it's not just talk anymore.
No, it's really happening. It feels like it's right on the cusp of becoming law.
We're talking about stablecoins, of course, and this brand new legislation that could genuinely reshape money as we know it, the Genius Act.
It's a pretty remarkable moment, I have to say. This act, and the full name is the Guiding and Establishing National Innovation for U.S. Stablecoins Act. It passed the Senate June 17th, 2025.
And with a strong vote, too, wasn't it? Bipartisan.
Yeah, 68-30. Pretty solid. And look, think of it like this. If Bitcoin is the wild, volatile, unpredictable one in the crypto family.
The rebel, yeah.
Exactly. Then stablecoins. They're the dependable sibling, maybe even a bit boring sometimes. But they're designed to hold that steady value, usually pegged one-to-one to something solid like the U.S. dollar. And this bill, well, it's the government finally stepping in and saying, okay, you guys are legit, but you need to play by some rules now.
And that's exactly what we want to get into in this deep dive. We're going to unpack stablecoins, really look at this new bill, the Genius Act, and try to figure out, is this the financial revolution people have been talking about?
Or is it, just another tech trend that's gotten a bit overhyped?
Precisely. And as we'll see, it's probably a bit of both. There's definitely some political drama mixed in, some serious economic questions. It's fascinating stuff.
What really drives home how important this is just the sheer scale we're dealing with. This isn't some tiny niche anymore.
Right.
Back in December 2024, just that 1 month stablecoin transactions hit, wait for it, $719 billion.
Wow, $719 billion.
Billion with a B. And by May of this year, 2025, the total market value, all stablecoins combined, was up to $246 billion.
Okay, that's not pocket change.
Not even close. That's a huge financial ecosystem bubbling up. And until now, it's largely been operating in, well, people call it the Wild West.
Yeah, I've heard that term a lot.
It fits this massive amount of money, mostly unregulated. It really shows why this Genius Act is such a potential turning point.
It really does. I mean, that kind of money flowing around without clear rules, it makes you ask, okay, what are stable coins? Fundamentally, you call them dependable. Great analogy. But for anyone still picturing those crazy Bitcoin charts, what makes a stable coin, well, stable?
Yeah, good question. The key difference is that peg we mentioned. Unlike cryptos that just float around based on market whims, stablecoins are specifically built to mirror the value of something else, something stable.
Usually the dollar.
Most often the U.S. dollar, yeah. Sometimes gold or other assets. But the basic promise is simple. One stablecoin should always be worth $1, give or take tiny fluctuations, but basically 1-to-1.
How do they maintain that? Is it just hope?
No, not hope. It's supposed to be backed by actual assets. The issuer, the company putting the stablecoin out there, is meant to hold reserves, real dollars, or very safe, liquid assets that match the value of all the stablecoins they've issued.
Got it. So no crazy price swings, no sudden collapses, ideally. Just that steady value. But if they're kind of boring compared to Bitcoin, what's driving that massive transaction volume, that $719 billion? What are people actually using them for right now?
Well, right now, a lot of it is still within the crypto world itself. Traders use them as a sort of digital safe haven.
Okay.
So if the market's looking choppy, they can move their money into stablecoins to park it, avoid the volatility without actually cashing out into traditional money. It makes it easy to jump back in.
Right. Keeps them in the ecosystem.
Exactly.
Right.
But the real potential, the thing that gets everyone excited, is using them for everyday payments and for global commerce.
Yeah, I can see that. The idea of sending money across borders instantly without those painful wire transfer fees.
Or just tapping your phone to pay for groceries with a stablecoin, it feels like it could change everything, doesn't it?
It really does. And those huge numbers you mentioned, the billions, it shows this isn't just for crypto nerds anymore.
Absolutely not. But like you said, that growth happened largely without rules. Think about Tether. They're the biggest player, market cap around $155 billion.
Huge.
And they've faced a lot of questions over the years about whether their reserves are really transparent, really solid. That lack of clear oversight, that's been a major worry. And that's exactly the kind of problem the Genius Act is trying to fix.
Okay, so that brings us right back to the Genius Act itself. Passed June 17th, that strong 68-30 Senate vote. It feels like a really foundational moment.
It absolutely is. It's basically the first time the U.S. government has looked at stablecoins and said, okay, you're a legitimate part of the financial system,
Right.
but you got to follow the rules now. It's a critical first step. Of
Oh,
course, it's
yeah.
not law yet. It still needs to get through the House.
Right, the House
Yes.
of Representatives.
Yeah.
And then get President Trump's signature.
Correct. So still a couple of hurdles.
So what are these new rules then? What does the Genius Act actually require from the companies issuing these stablecoins? What are the protections?
It lays out some really key things. Number one, stablecoins have to be fully backed, and not just by anything, but by highly liquid assets,
Meaning?
meaning things like actual U.S. dollars in a bank or short-term U.S. Treasury bills, stuff you can convert to cash very, very quickly.
Okay, so no weird, risky investments backing the coins.
Exactly. The idea is to prevent a run, right? If everyone suddenly wants their dollars back, the issuer needs to have the cash or cash equivalents readily available. No waiting. That's meant to avoid another Terra USD kind of collapse.
Makes sense. What else?
Second, transparency. Issuers have to publish monthly reports showing exactly what's in their reserves. No more guessing.
Okay, open the books.
Pretty much. Third, strict rules against money laundering. Got to comply with all the existing financial crime regulations.
Standard stuff for finance, really.
Should be, yeah. And finally, and this is crucial for users, consumer protection. If a stablecoin issuer does go bankrupt, the people holding the stablecoins, the consumers, get first priority in getting their money back from the remaining assets.
Okay, that sounds like a pretty solid set of guardrails.
Yeah.
Trying to prevent some of those past crypto blow-ups. How's the industry reacting? Are they pushing back or?
Surprisingly, the crypto industry seems mostly happy about it. Thrilled, even.
Really? More regulation.
Yeah, because they see it as bringing legitimacy. There's this quote from Adul Patel, he's the CEO of Mudrex, basically saying this lays a foundation for trust, transparency, and long-term growth.
Ah, okay. So clarity is good for business.
That seems to be the view. Companies like Circle, they issue USDC, which is the second biggest stablecoin, about $61.5 billion market cap. They're really enthusiastic. They see clear rules as the way stablecoins finally go mainstream, become as normal as using Venmo.
And it's not just the pure crypto companies jumping in, is it? We're seeing traditional finance getting involved too.
That's a huge part of the story, yeah. You've got the big banks like JP Morgan. They already have their own JPM coin for internal use. And the fintech giants like PayPal, they launched their own stablecoin, PYUSD.
Right, I remember that.
So everyone seems to be envisioning this future where these digital dollars are used for, well, everything, from buying a burger to settling massive international business deals faster, cheaper, smoother.
It does sound potentially revolutionary, but let's bring it back down to earth. For someone listening right now, maybe thinking, okay, crypto, stablecoins, still sounds a bit out there. Why should you really care about this stuff? How could it actually affect your life?
Yeah, it's a fair question. Most people aren't waking up thinking about crypto regulation. But stablecoins, they could kind of sneak into your daily life faster than you might think.
How so?
The most obvious way is payments, both sending money globally and just paying for things here.
You mentioned sending money overseas.
Yeah.
I know people who do that, and the fees and the delays.
Yeah.
It's painful. You called it like sending a carrier pigeon.
Huh. Yeah, I can feel that way. Stablecoins promise to make those cross-border payments almost instant and much, much cheaper, like sending a text message instead of an expensive, slow wire.
That's a huge deal for families sending money back home or
Yeah.
for businesses trading internationally.
Absolutely. And then there's just everyday spending. Imagine paying for coffee, groceries, maybe even rent using stablecoins directly from a digital wallet on your phone.
Is that realistic?
Well, companies like Visa are already partnering with stablecoin platforms. There's one called Bridge in Latin America they're working with. The plumbing is being built right now. Your digital wallet could genuinely become your main way to pay for a lot of things.
Okay, that's a big shift. And what about people who don't even have bank accounts? There are over 1 billion worldwide, right?
Yeah, financial inclusion. That's another huge potential benefit. If you have a smartphone, you could potentially access stablecoins and use them for saving, sending, spending, even if you're miles away from a physical bank branch.
Like a digital piggy bank for everyone.
Kinda, yeah. And beyond just spending, there are even ways to potentially earn yield on stablecoins, like a sort of high-tech savings account, though that comes with its own risks, of course.
Which brings us to the but. There's always a but, isn't there? This sounds great, but we know stablecoins aren't magic. We saw what happened with Terra USD a couple of years back. That was nasty.
It was. The Terra USD crash in 2022 was a huge wake-up call. It lost its peg to the dollar, completely collapsed, wiped out billions. just vanished.
And that was an algorithmic stablecoin, right? That's different.
Exactly. It wasn't backed one-to-one by real assets. It used complex algorithms, basically computer code, to try and maintain its peg, and it failed spectacularly. The Genius Act specifically targets that kind of risk by demanding that regulated stablecoins must be backed by real, tangible, liquid assets.
Okay, so the law is trying to prevent that specific disaster from happening again.
Correct. It's a crucial difference. But, critics still argue. They question if even these rules are enough to stop all potential problems or future meltdowns. It's still a new technology.
And that leads us neatly into the political side of things, which, wow, it's got some drama. Let's talk about the Trump factor. President Trump's connection to the crypto world is pretty well known, and it's definitely stirring the pot with this bill.
It certainly is. I mean, his family's company, World Liberty Financial, they launched their own stablecoin, USD1, back in March 2025.
USD1, okay.
And reports say it's already worth something like $2.2 billion. That's not trivial. And then just recently, there was news about an investment firm in Abu Dhabi using that same USD1 stablecoin for a massive $2 billion investment into Binance.
Binance, the huge crypto exchange.
Wow.
Okay. And Senator Elizabeth Warren has been pretty outspoken about this connection, hasn't she?
Very. She's basically accused the bill of potentially supercharging Trump's profits while he's actually in office.
It's the wrong word.
Yeah, she warned that, quote, anonymous buyers, big companies, and foreign governments could use the president's stablecoin to pay him off. That's a really serious allegation about potential conflicts of interest and, frankly, corruption.
So we're not taking sides here, but reporting what's being said. It highlights just how intertwined this new tech is becoming with political power and money.
Absolutely. It shows the kind of economic clout these things already have and how it's blurring lines in ways we haven't really seen before.
And this political fight isn't just about Trump, right? The whole crypto industry has become a political player.
Oh, massively. In the 2024 elections, the crypto industry apparently spent over $119 million backing candidates they saw as friendly to crypto. That's serious money and influence.
So they have a big stake in this legislation.
Huge. And with Republicans currently controlling both the House and Senate, the bill seems to have a clearer path. But Democrats aren't just rolling over, they're pushing back, demanding stronger protections against corruption, better consumer safeguards. It's definitely a negotiation.
And what about those big tech fears? Warren also raised concerns about companies like Meta or Amazon getting into the stablecoin game.
Yeah, that's another angle. Her worry, and it's one shared by others, is that this bill might accidentally open the door for these tech giants to issue their own stablecoins.
Creating a kind of digital company script.
Sort of. But worse, maybe. Imagine a world where Meta or Amazon not only knows what you buy, but also controls the money you use to buy it. Think about the data.
Every latte, every grocery item, feeding right into their ad algorithms. That is kind of creepy, yeah.
It raises huge privacy questions. If companies that already have so much data on us also get control over our financial transactions, that's a lot of power concentrated in a few hands.
Okay, so lots of domestic issues. But this isn't just happening in the U.S., is it? Stablecoins are global. How does the Genius Act fit into the bigger world picture?
You're absolutely right, it's global. Estimates are over 160 million people worldwide already hold stablecoins. The market's booming everywhere.
Different coins popular in different places.
Yeah, generally, Tether's USDT is dominant in Asia and Europe, while Circle's USDC is bigger in North America. But the U.S. has a unique advantage here, the dollar itself.
Because most major stablecoins are pegged to the U.S. dollar.
Exactly. So, somewhat counterintuitively, the rise of dollar-pegged stablecoins could actually strengthen the U.S. dollar's role as the world's main reserve currency.
How does that work?
Well, Vice President J.D. Vance actually called stablecoins a potential force multiplier for U.S. economic power. The thinking is, the more people globally use dollar-pegged stablecoins, the more demand there is for the actual U.S. dollars or U.S. Treasury bills backing them.
Which props up the dollar's value and influence.
Precisely. So it's not just about regulating tech, it's potentially a tool for geopolitical economic strategy, maintaining that U.S. leadership.
So if the U.S. sets up a clear, regulated framework with the Genius Act, could that cause a shift, maybe away from some of the offshore players?
That's a very strong possibility. Issuers like Tether, which is technically based in El Salvador, might lose market share if users feel more comfortable with U.S.-based, fully regulated stablecoins like USDC or PayPal's PYUSD.
Makes sense. People might prefer the ones under stricter U.S. oversight.
Exactly. One analyst, Himanshu Maridia from Seif.q, predicted exactly that, a reshuffle in stablecoin dominance towards the compliant players, and other countries are definitely watching. Canada, Japan, they're looking at the U.S. moves and figuring out their own rules.
Like a global game of financial chess.
It really is. And the U.S. just made a pretty bold move with this act.
Okay, the potential rewards sound huge. Faster payments, inclusion, maybe even boosting the dollar. But let's not gloss over the downsides. You said stablecoins aren't all rainbows and unicorns. What are the really big risks here? Is this whole thing a ticking time bomb?
Well, there are definitely some serious risks to keep in mind. One of the biggest is reserve mismanagement.
Meaning the companies don't actually have the backing they claim.
Or they don't manage it properly. If the assets backing the coin aren't safe or liquid enough, the whole thing can fall apart. We saw Tether get fined $41 million a while back for, let's say, sketchy practices around their reserves.
Right.
And even Circle's USDC, which is generally seen as more transparent, had a scary moment in 2023 when Silicon Valley Bank collapsed. They had some reserves there, and the USDC price briefly wobbled off its dollar peg.
Oof. Okay. So the Genius Act tries to fix this with strict rules on reserves.
It does. It mandates those high-quality liquid assets and transparency. But whether that's foolproof in a real crisis, we haven't seen it tested yet.
What about the sheer size? If stablecoins get huge, could they destabilize the traditional financial system, like the treasury market?
That's a concern some economists have raised. JP Morgan estimated stablecoin issuers could become the third largest buyers of short-term treasury bills.
Wow, third largest.
Yeah. Now, normally, more buyers is good. But imagine if there was a massive panic, everyone trying to cash out their stablecoins at once. The issuers might be forced to sell off enormous amounts of those treasury bills very quickly.
Which could crash the price of treasuries.
Potentially. It could cause a real credit crunch or instability in a market that's supposed to be the safest in the world, like the stock market crashing because everyone's dumping safe government bonds. That's the nightmare scenario.
Yikes. Okay, what else? Illicit activity.
Always a concern with crypto. Without really strong oversight, stablecoins can be used for money laundering, terrorist financing, fraud. The Genius Act includes anti-money laundering rules, but critics worry they might not be tough enough, that there might still be loopholes.
And we keep coming back to big tech taking over. The privacy nightmare scenario.
It's a persistent worry. If companies like Meta or Amazon roll out their own stablecoins under potentially weaker rules, imagine your financial life becoming just another data set for them to mine and sell ads against. Every purchase, every transfer, fed into the algorithm.
Okay, so definitely some scary risk. But let's quickly recap the potential upside again because it is tempting.
Absolutely. The core promise remains faster, cheaper, more accessible payments, especially powerful in developing countries, but useful everywhere. Plus, it gives traditional banks new tools to compete with nimble fintech startups.
We mentioned JP Morgan, Bank of America, looking into a joint stablecoin.
Yeah, it's like the old guard trying to get hip, putting on skinny jeans to keep up with the cool kids. They see the potential and don't want to be left behind.
So where does the bill go from here? Senate passage is done. What's the next step?
The House. The House of Representatives needs to pass its own version. They might tweak it. There will likely be debates. Those political tensions we talked about will play out.
Democrats wanting stronger rules, Republicans maybe wanting it done faster.
Probably something like that. There's a bit of a deadline looming to the August 2025 recess. Often Congress tries to get big things done before they break for the summer.
And the rest of the world isn't waiting, right?
No, definitely not. There's a sense of global race. If the U.S. takes too long, other countries or regions might establish their own frameworks first and potentially steal the U.S.'s thunder, as they say.
Looking even further ahead, what are the predictions? How big could this market get?
Well, Deutsche Bank put out a prediction suggesting the stablecoin market could hit $2 trillion by 2028.
$2 trillion. That's enormous growth from where it is now.
Huge. A lot of that driven by businesses. Using them are things like payroll, supply chain payments, international trade. And for consumers, we could see stablecoins just seamlessly integrated into apps we already use, like Venmo or PayPal.
Making digital dollar payments as easy as sending a GIF.
Exactly. And you hear whispers about major retailers, Walmart, Amazon. They're reportedly sniffing around, exploring how they could use stablecoins too.
So wrapping this all up, why should you, listening right now, really give a hoot about stablecoins and the Genius Act?
Because, honestly, this isn't just for crypto enthusiasts or Wall Street types anymore. This is fundamentally about how you might be paying for things, managing your money in the fairly near future.
It could make things easier, faster, cheaper.
Potentially, yes, especially across borders or if you want alternatives to traditional banks. But it also comes with real risks that could seriously impact your finances if things go wrong.
And the Genius Act is trying to manage those risks.
It's a huge step in that direction. It's trying to bring stablecoins into the regulated financial world, make them safer, more legitimate. It could really redefine digital money. But, it's not a magic wand. There's still political wrangling, corporate interests are involved, and that underlying risk of financial instability hasn't vanished entirely.
So for now, keep an eye on your digital wallet, maybe. That coffee you buy next week might eventually be paid for with a stablecoin. And this act could be the difference between that being a smooth, easy transaction or some kind of digital mess.
Exactly. And the really big question to chew on, I think, is this. As we move towards this more digital financial world, maybe even one where our dollars live mostly on blockchains, are we actually ready for that? Because like it or not, that future seems to be arriving fast.